What's up, guys? Welcome back to the channel. These past few days have been crazy with this GameStop to the moon stock shorting squeeze that the folks over at Wallstreetbets Reddit are doing to the hedge funds and the short sellers that were trying to push down and profit from the fall of GameStop stock. And that's really hard to say time and time again, so we are just going to try to get through it. But I mean, this is a David and Goliath struggle that I haven't seen in a while. And the backstory is that a couple million people on the subreddit Wallstreetbets, they decided that they have had enough and they wanted to play the short sellers, the hedge funds game, and do it right back at them. So they all got together and they started purchasing GameStop stock, which made the price of it go up, really squeezing the short sellers. Now, if you're not sure what short selling is, it's just a mechanism where you can trade stocks and you make money as the stock goes down. And if there are enough of these shorts, enough puts in the market, you can move the market in the way you want. And when you have several $1 billion to deploy in this strategy, you can make the market move and basically make it a self-fulfilling prophecy. So you're making bets that the stock is going to go down, and then you go ahead and make it go down. And so you do make money as it goes down, but there is a bottom floor for how far a stock can go down. It can lose 100% of its value, and then you would make whatever the return is on that. The only problem with that is that if a stock goes up, there is no ceiling for how high a stock can go up. So if you are a short seller, your losses are potentially infinite. This is where the Wallstreetbets guys came in. They all began to buy GameStop, which was heavily shorted. There was a ton of short positions in it, to the point where there may not have even been enough shares to cover those short positions in the market. They began to buy up these shares just on the retail market. Starting at the end of 2020, the share price for GameStop was about $18. But if you look back in like September or so, it was only about $4 or $5 a share. On January 28th, they pumped the share price up to $469.42, causing billions of losses for the hedge funds. Now, needless to say, the hedge fund people weren't too happy, and they had gotten on major news outlets, CNBC, crying, saying that this wasn't fair, whatever. But these guys on the Wall Street Bets subreddit just are continuing to push. To this morning, it closed yesterday at like 193. It opened up at about 335, and that is the way that these how persistent these guys are being in that they are continuing to keep the price up. So this has been supported by short sell hater Elon Musk. He came out in support of this, and that has just really added fuel to the fire, and it has just kind of become this populist movement. So everything was going great until Robinhood stepped in. They halted the retail buying of GameStop stock, while institutional buyers were able to trade however they wanted. Retail customers could sell their positions, but they could not initiate new purchase positions, which was the entire goal, was to run up the price of the stock in order to maximize the losses for the short sellers. There's also a secondary goal, from what I've read, of trying to hold as many of the shares possible so that there are no shares to buy back to cover the short positions for these hedge funds and the hedge fund managers, exacerbating the losses that they're going to have to take. So when Robinhood halted the retail purchase of this stock, obviously there was a dramatic fall off in the price from the like $469 down to the $193. It was rumored that there was collusion between hedge funds and Robinhood, specifically Citadel, who has quite a bit of business connection with Robinhood, to halt the trading, to halt their losses, and potentially let them reposition their shorts to a higher point in the market so that maybe they could make up some of those losses. There are also rumors that Robinhood simply ran out of liquidity to make trades and had to have $1 billion or more infused from another institution. There's also thoughts that maybe there were so many shares being purchased and held by retail buyers that there weren't any shares for these hedge funds to repurchase to cover their shorts, or there may not have been any shares to purchase at all, leading to a situation where you had paid for something but weren't going to be able to get it, which would lead Robinhood to be in quite a bit of trouble. Shortly after Robinhood halted the retail buying of the GameStop, they were hit with a class action lawsuit out of New York State by someone alleging that Robinhood had manipulated the market by not allowing retail purchases of the GameStop. All of this with Robinhood stopping the retail purchase of shares drew a lot of negative attention to the Robinhood app. People from the same subreddit went onto the Google Play platform, drove their app star rating down to like a 1-star rating. And then cats and dogs started living together. Things started just going nuts because AOC tweeted that there should be an investigation and, and that might be forthcoming. Ted Cruz ended up retweeting that, saying that this was the truth. I mean, these are like a left and right working together here. Donald Trump Jr. has been in support of it. Rush Limbaugh, Elizabeth Warren. I mean, just who would have thought that short squeezing, hedge funds shorting GameStop stock would be the thing that brings us together in 2021. So we'll have to see how this all plays out. There are several other heavily shorted stocks such as Bed Bath & Beyond, BlackBerry, AMC that are in the crosshairs of these short squeezers who really want to just squeeze the hedge funds and squeeze the hedge fund managers. Now, is this something that you want to get involved in, or you think that you should get involved in? Just be cautious. This is less of investing, more of a movement against these hedge fund managers and these hedge funds. So if you do want to get involved in this, it might be fun. It might be fun to be part of this, but know that you're basically just gambling and only put in money that you can afford to lose 100% of it. Because if you buy in up here at $4.69, the company itself really hasn't changed, other than the fact that it got bumped up from like a nothing company to number 464 on the Fortune 500. I mean, it's insanity what is happening right now. So if you do want to be part of this and you want to get into it, just be sure that you know that this is like going to the roulette table and that you may lose 100% of your money. I hesitate to call it an investment. You could lose all of it. So, have fun if you want to. Check these guys out on the Wallstreetbets subreddit. It's a pretty interesting conversation that they have there. It's something that I've never seen before in my life happen in the stock market and to Wall Street. And it's something else. If you guys like this video, be sure to smash that thumbs up button for me. That really helps out this video and this channel and the YouTube algorithm. Be sure to subscribe if you haven't yet. I appreciate you guys watching today. Keep an eye out on GameStop stock ticker. Keep an eye out on AMC. If not anything else, it is fun to watch. And it's fun to look at. It's been probably the best thing that I've seen since the start of 2020. I appreciate you guys watching today, and I'll see you next time.